In this video, we'll take a brief look at how to trade Forex options. Now, the first thing that you need to know is that an option is a great way to settle your view on a currency pair without actually taking on extreme risk. And what that means is, for example, these options work the same as any other option. So let's just say you buy an option for $500. And it is currency pair X is going to be above 117 by a specific date, because all options do have a date. And that date gets reached and your currency pair stops at 116.90. You had bought a call. You profit if the market goes above 117. So this means you have lost $500. You're not going to lose any more than that. You can only lose the principal. A put, on the other hand, would be the exact opposite. So you are betting that the market is going to be below 117 by a specific date. It closes at 116.90. You've made profit. Now, the profit is going to depend on how far, time decay, and a whole host of other issues, which go well beyond the scope of just a single video. But suffice to say, it's about getting the direction of the market right by a specific amount of time. There are daily, hourly, monthly options. It just kind of depends on where you're trading. There are also the strategy of selling. So the call, the right to gain above 117, and the put, let's just say it's down here at 116. If you believe that the market will stay below 117, you can sell that call to another trader and you collect the cost. So remember, it was $500 in our example. So you would get $500. And as long as the market stays below 117, you collect that premium. On the other hand, if it goes against you, you need to get out quickly, because it will not only take your $500, it will start to compound losses. Same thing with put. You can sell a put. Now, there are a plethora of places where you can trade these things, but the only true exchange is going to be the CME group and other futures markets around the world. And as a result, I'm looking at the CME group. But there are liquidity pools for brokers that will allow these types of trades. And you can see there are some FX options listed on this chart. Let's go ahead and go to Friday settlement, weekly option for the 4th week of the month. That's what just closed. You use the CME group FX fixing price. So it's what they base the price on. 10 a.m. New York time, and it timestamps it each day or whatever. And so in this case, that was the euro US dollar. 6E, which is the product code of the option, fixing code, and that was the actual price. So 111.21 4. So that was your price at that time. That's when that option gets timestamped, 9 a.m. Central, 10 a.m. New York. So if your call was for 111, you've just made quite a bit of money. If your call that you sold was at 111, you just lost quite a bit of money. Time decay again comes into play, but that is something that takes quite a bit of education to understand. There are also binary options, which are simple 0 to 100. So these are not at exchanges like the CME. These are at various brokers. They are simple. It either pays 0 or pays $100. So if your call or your put is in the money, meaning that it's profitable at the time of expiration, you get $100. If it is not, you lose whatever your premium was, and that will go up and down depending on how far away you are from the strike price, etc. So this is an option out there. Most Forex traders tend to use these to hedge. So if you have a core long euro position, you might buy puts just in case the market goes against you, because the idea is, let's just say, for argument's sake, that your put cost $200. But you have a long euro position you're trying to hang on to for the next 5 years. For whatever reason, you think the euro is going to be in a bullish trend. So if the market continues to go your way, you lose $200, right? However, if the market pulls back against you and it strikes your put price, you may get, you might get $250 or $300, just depending on how far it falls, to help mitigate some of those losses. So while you may lose $400 in your spot price, this allows you to take much less of a loss and hang on to this core position. So that's a strategy as well. Obviously, there's a lot that we could talk about with options, but this is just a primer to let you know that they're out there and they are worth exploring.